I have before me today, I am totally excited to introduce you to some and to others to Bernadette L. Harris. And I want to read this short bio, but there's so much more about this lady. And I've asked her to not hold back, no modesty today, because I want you to share, Bernadette, in just a second, a little bit more than that is written here. So Bernadette is an award-winning tax and forensic accountant, best-selling author, adjunct instructor, and podcast host, and TEDx speaker. I am just excited about all this. She's committed to keeping small business in business. I love that. You get it? Keeping small business in business. As CEO of By the Book Accounting, she has helped thousands of entrepreneurs across the country, state, start, operate, and grow thriving ventures. Bernadette, a certified fraud examiner, CFE, has a BS in accounting, an MBA, and an MS in fraud and forensics. She is an expert at taking complex subjects like taxes and accounting and making them easy to understand and fun. I mean, that's something within itself. Making numbers fun. I love that. She has been featured on ABC, CBS, NBC, and other nationally known media outlets, speaking on entrepreneurship and fraud prevention. Welcome, Bernadette Harris, to the GCBN virtual platform today.
Thank you so much for the welcome and the opportunity to share with your community of people. You are doing a great work and definitely needed. So glad to be one of the many contributors to this amazing network. So I have a presentation that I want to share with you all. And if you have questions, you can type your question. I'll take the questions at the end, but you're welcome to type those questions in the chat as we go through the presentation. So I'm going to share my screen. Okay, so today we are going to talk about the business side of business. One of the things that I've found is that businesses don't go under because people don't know how to do what they do. They go under because people don't know how to run a business. There's a very distinct difference between baking a banging red velvet cake and running a bakery. So one of the things that I do in my business is I teach people how to run the bakery. So today we're going to talk about that. We're going to talk about the business side of business. So before we get started, I have to start with this disclaimer. So this is a presentation that is not intended to serve as legal, tax, or any financial advice or opinions related to your individual situation. But because your situation is your situation, it is recommended that you speak to your advisors about your specific circumstances. So the information that I'll be sharing today is general in nature, and I'll try as best as possible to answer your specific questions, but just understand I don't know your whole situation. And so the advice that we give today cannot be, don't take it and run with it. Make sure you have a professional on your team that can help you with that. And if you don't have a professional on your team, we can talk about that as well. So today what we're going to do is I'm going to give you just an overview of the things that we're going to cover. And I want to cover a lot of information in a little bit of time. I will be as thorough as possible as we go through this presentation and understanding that it is a very high level overview of these things. And so we may or may not get as deep as you'd like, but at least give you enough information to be able to be better business owners. I went too fast. I forgot to introduce myself. So that's me. I'm Bernadette L. Harris, and I like to call myself an accidental entrepreneur because I never thought that I'd own a business. In fact, I never even wanted to be an entrepreneur. I thought that once I graduated from college that I was going to get my degree, find me a great company, work there for 30 years like my mom did, and retire. But 5, maybe 4 years after graduation, I got bit by the entrepreneurial bug, and let's just say I never looked back. So I've owned several businesses, but my passion, my calling has been in my accounting firm. So I started my accounting firm in November 2001. And the funny thing about that is I started my business 2 months after 9/11. And so most people
Wow.
say, who does that? And the reason that I bring that up is because there are a lot of people that are in the midst of this pandemic. You thinking that you're going to wait until the pandemic is over to get started because you can't start right now. And a lot of times opportunity presents themselves in things that what we call challenges, right? So hopefully that's an encouraging word to somebody today. I shouldn't have started my business 2 months after 9/11, but here I am. And I'm still here 19 years later, serving and helping entrepreneurs across the country do just what I did. So I'm also, as you heard my bio, I'm a forensic accountant. I have a certification as a certified fraud examiner, as well as a master's in fraud and forensics. So in addition to working with individuals and small business owners, I also work with companies and nonprofit organizations and churches in the event that they are a victim to a financial crime. Financial crimes are like you heard embezzlement, insider fraud, those kinds of things. Those are the types of cases that I work on. And so I'm the person that gets hired to determine who did it, how they did it, how much did they
Wow.
pay, and what do we need to do to make sure that they never do this again.
Wow.
I'm also a best-selling author. I've written 4 books. My first book was published in 2010. And since that time, I've written 3 others. The last of the 4 is my bestseller. It is called Did You Hire a Fraud? And you can find them on my website or on Amazon. I'm also a podcast host. And so I host a podcast with my daughter. We're on break right now because it's tax season, but I host a podcast with my daughter. And this is my passion project. This is something that I get to do with my favorite human being in the whole wide world. We talk about entrepreneurship, the good, the bad, and the ugly. We share some of our own personal stories, the things that we've learned in life and how they've helped us in this entrepreneurial journey. So if you are a podcast listener, I'd invite you to check it out. It's called the CEO Launch, and we're on all podcast platforms. So check it out. Last but not least, last year in September, I crossed off something really big on my bucket list. I gave a TEDx, y'all, and I'm so excited about it. So even though it was a pandemic, the TEDx continued on and it was virtual, but I did it. I gave a TEDx. And so if you want to check out my TEDx, just Google Bernadette Harris TEDx. It'll come up. So now that you know who I am, let's jump into what we are going to talk about today. Uh, so hold on, I need to move that out of the way. So we've already done the disclaimer and our presentation summary. So let's talk about the difference between self-employment and business ownership. A lot of people get these things mixed up, so hopefully I'm able to provide some clarity with you on this. So self-employment means that the person doesn't work for a specific company who pays them a salary or something. They're usually like a freelancer or an independent contractor. So self-employment in most terms, most people don't think of themselves as business owners when they're self-employed, but honestly, but the IRS considers you a business owner. And so when you are self-employed, meaning you get paid and nobody is taking taxes out of that check, you don't get a W-2, you get a 1099, you're considered self-employed. You may work for one company or you may work for multiple companies. Whereas business ownership is more so control over enterprises. So a lot of times you own a business, but you're self-employed. And if you own a business and you're self-employed, that means if you stop working, your business stops making money. When you have true business ownership, your business will continue to make money whether you work or not. So that's kind of the difference between self-employment and business ownership. Many of us start out in the self-employment space, and the goal is to move more so into business ownership. So let's talk about taxes, because this is a part that a lot of people have questions about and don't really understand how it all works. So there's really like three types of taxes that I want to talk about. These aren't all of the taxes, but these are the income taxes that we want to talk about. So the first one is federal income taxes. This is administered by the IRS and is based on your earned income. So if you have a business, you make money from that business, there's a profit, you will pay federal income taxes on those profits. The same is true with state income taxes. It is based on your income, and if you're a business owner, it's based on your profit. With state income taxes, you will pay a percentage of your state income tax. Now, if you live in one of the few states that do not have a state income tax, that does not apply to you, like Florida and Texas are the two that come to mind. Self-employment tax, however, is what you may have seen on your paycheck when or if you still have a W-2. And this tax covers Medicare and Social Security. So now one of the things that I want to explain here is that when you become self-employed or a business owner, you are both the employer and the employee. So let's back up. When you were just an employee, your company paid half of your Social Security and Medicare. Most people don't know that. And then you paid half of your Social Security and Medicare. When you become self-employed, guess what? You're both. You're the employer and the employee. So you pay both halves of the self-employment tax. And this is why, again, it's really important for you to have a conversation with an accountant before you start your business so you understand what your tax implications are. A lot of people, first year business owners, get really tripped up when they have to pay the self-employment tax because they didn't plan for it. So you're the employer and the employee, and you have to pay taxes on both. This is, my mouse is going too fast. I feel like we skipped something. I'm sorry, my mouse is like, okay, well, that's 5, that's 6. All right, sorry about that.
No problem. No.
So entity types. This is something that I really want to spend some time on to make sure that we have a lot of clarity on these entity types. Because this is a question that I promise that I answer every single day in my business, every single day. Maybe not Sunday, but every day I feel like I'm answering this question. So what I want to do is we're going to go in order. So the first entity type is sole proprietorship. So the word sole by definition means one. So a sole proprietorship is a business that is owned by one person. You cannot have a sole proprietorship with your spouse, with your sibling, with your boo, with your classmate. Sole means one. So it is one owner. As a sole proprietorship, you own the business, right? So you're the one putting in all of the money, you're the one making all of the decisions, the income and income and expenses are reported on your tax return. So a lot of times what people don't realize is as a sole proprietorship, your taxes are included. The business taxes are included with your personal taxes. They're filed at the same time. And they all flow together. So that's something to take into consideration. I've heard people say, I haven't filed taxes for my business, I just filed my personal. If you are a sole proprietorship, your business and personal taxes are one in the same. Another thing about sole proprietorships, just to kind of give you an overview, sole proprietorships, real easy to start. They're easy to start, and they're easy to shut down. I like to think of sole proprietorships like dating. You date somebody, you like them, they're cute, they're nice, they're whatever. You date and you're good. You're not necessarily in a commitment, but you may, even if you're dating exclusively, you're not in a commitment, right? If things don't go so well or something happens and you discover who this person really is and you want to end the relationship, you just end it. You don't have to go to court. You don't have to have any a lawyer draft any paperwork. You're dating, so you just shut it down. Same thing with a sole proprietorship. If the business doesn't work out, you can just shut it down. There's nothing legal that you have to do. Maybe not renew your business license. That's about it. But sole proprietorships are like dating. They're easy to start. They're easy to shut down. The other thing about sole proprietorship is that personally you're liable. So anything that happens in your business, you personally are liable for those things. So for instance, something happens in your business, somebody tries to sue you, they can go after your personal assets, your home, your car, your retirement savings, all of these things will be subject to that lawsuit. So there is no legal or no liability protection when you have a sole proprietorship. So some people say, well, what's the whole point of getting a sole proprietorship if I can still get sued? Well, a sole proprietorship is usually a good idea when you're first getting started, you're not really sure. Network marketing, direct sale companies are ideal for a sole proprietorship because you don't know how long you're gonna do it, and it keeps your taxes simple and all of that. So those are ideal types of businesses for sole proprietorships. The second entity is a partnership. And a partnership, by definition, means that there's more than one person. So a partnership, you can't have a partnership by yourself, right? You got to have somebody else in your partnership. It could be a spouse, it could be a family member, it could be a group of friends. And you can have 2 people, or you can have 20 people, or you can have 200 people. There's no limit to the number of people that can be a part of a partnership. One of the things that I always say to people is when you are starting a partnership, a couple of things you want to make sure that you do. In addition to understanding the tax ramifications of having a partnership, you also want to make sure that you have a conversation with an attorney to have your partnership agreement drafted. So what do I mean by this partnership agreement? A partnership agreement is the document that says who is going to do what, who is going to contribute what, how do we add a partner, how do we get rid of a partner. All of these things go into a partnership agreement. So what I want you to think about is the partnership agreement. Think of it kind of like as a prenup. It is the agreement that you came up with when you were in love. You love each other. Everybody's on the same page. We're going to do this business. We're going to get rich. We're going to help people. We're going to change the world. The partnership agreement is all the things that you say that you're going to do while you still like each other. Because there may come a day, and I hope it doesn't, but there may come a day when you don't like each other anymore. And that partnership agreement is what is going to dictate how you handle that day that you don't like each other anymore. So it's very, very important. I know too many businesses that go into business without having a conversation with an attorney because they think they can't afford it. And when it's time to dissolve the business, it ends up costing them more than the conversation with the attorney would have cost had they had those things done in the beginning. So it's not an option. Like if you feel like you can't afford an attorney to draft your partnership agreement, you cannot afford to be in a partnership. So partnerships are businesses with multiple owners. You have a partnership agreement. That partnership agreement is the governing document for your entity. It says who is going to be doing what, right? And it's just the documentation. It's you sitting down and it makes you think about things that you may not have thought about. Lawyers have the experience and the ability to be able to foresee things that you never even thought of. And I have stories, I have clients that have had partnerships and dissolved those partnerships. Some of those dissolutions were amicable, but some of them got ugly. And the ugly ones always cost more money. So spend the money up front to get this document. Partnership agreements are ideal for businesses like real estate transactions or passive activity. Those are great businesses for partnership. The other thing about a partnership is a partnership files a separate tax return. So the partnership files a return, and it's called an information return in a sense, because this partnership does not pay taxes. It just files a tax return to tell the IRS, this is what we made, this is what we spent, these are our partners or our owners, they are going to claim this profit on their personal tax return. So in addition to it being a separate tax return, it has to be filed before the partners can file their own tax return. This is really important to understand, is because a lot of times people don't know that the partnership return has to be filed first, so they go file their personal return before they file the business return, or they don't know that it's a separate tax return and you're surprised to see how much it costs to file a partnership return. So these are all things that you want to make sure that you take into consideration before you start a business, especially a partnership. Number 3 is an S corporation. And S corporation is honestly my favorite entity type, but I have to say that the S corporation is not for everybody. I don't care what social media says. I've seen lots of memes that make me want to pull my hair out when I see it and it says, get you an S corporation. Listen, stop listening to social media and listen to professionals. S corporation is a great entity, but it is not for everybody. Please repeat after me. S corporation is a great entity, but it is not for everyone. It is not intended for every business, right? So one of the things that you have to know before you go to switch to an S corporation, these are some of the things that I want you to know. Number 1, you need to have consistent income, enough so that the corporation can pay you as an owner and someone working in the business a salary. If you're just getting started, you don't know how much money you're going to make. You don't know if you're even going to be able to pay yourself a salary. S corporation is not necessarily right for you because S corps have to pay their owners a salary. Number 2, the S corporation again is a separate tax return. And this tax return costs a lot more than an individual tax return. And so you need to make sure that you are positioned to benefit from being an S corporation before you just jump and do that. And so it goes back to my disclaimer slide. You want to have a conversation with a professional. Now, the S corporation is my favorite entity because it can give you the liability protection that the partnership and the sole proprietorship does not. You can also save on taxes if you structure it properly and you have books, meaning that you have an accounting system where you're keeping track of your income and expenses and you're paying yourself a salary. It can be an advantageous business. So the types of entities that I usually recommend to be S corporations are those with consistent income, service-based providers like myself as an accountant are providing the service. Those are ideal industries for the S corporation. Next, let's talk about C corporation, because a lot of times people ask about C corporations and should I be a C corporation? It depends, right? So C corporations, again, are usually larger businesses with higher income. Everybody is on salary. It's ideal for industries where maybe you want to pay fringe benefits, and fringe benefits can be a tax deduction on a C corporation where they're not on an S. So a C corporation, again, is not for everyone. C corporation is a good entity for individuals who are looking for people to invest. Most investors want to invest in a C corporation because of the record keeping requirements that are that surround a C corporation. So those are things. Another thing to note: C corporations file a separate tax return, just like the S corporation and the partnership. The difference, however, is the C corporation is not a pass-through entity, meaning that the profits do not pass through to the owners. The C corp itself pays those taxes. So again, you want to make sure that you have a conversation with an accountant to see if being a C corporation is the right entity for you. So now you're probably saying, well, what about an LLC? It's not really an entity type, but I put it on here because most people know the LLC. But let's talk about, what does the LLC mean? The LLC is a state designation. The IRS does not care about LLC. The IRS wants to know, what is your tax treatment? How will you be taxed as a business? So when you have an LLC, I like the LLC because the LLC has the flexibility to be any of these 4 entities that I just mentioned. So let's talk about it for a second. As an LLC, you're a single member LLC. That means that it's one of you. You are automatically going to be taxed as a sole proprietorship because it's just one owner. So you get the benefit of the simple taxation and structure of a sole proprietorship, but the LLC gives you some liability protection that a regular sole proprietorship won't have. The other thing is that the LLC, now let me just put this caveat. So can I stick a pen? I'm gonna stick a pen right here. You can get liability protection by having an LLC, but you have to operate like a business. What do I mean by that? Well, that means that you have articles of organization, you have an operating agreement, you have a business account, you keep your stuff separate, you're not commingling funds, you are operating like a business. If you do not operate like a business and you don't have those things that I just mentioned, you do not get the liability protection that an LLC offers. So that's my pen. All right, so back to the LLC. LLC, if you have a single member LLC, IRS automatically taxes you as a sole proprietorship. If you have a multiple member LLC, the IRS will automatically tax you as a partnership. The only way that your LLC can be taxed as either an S corporation or a C corporation is you have to make a special election. So that means that if you decide that you want to be taxed as an S corporation, this is something that we as accountants, we wish you knew. When somebody asks you what type of entity you have, you say, I have an LLC and it's taxed as, and you pick which one it is. So if you have a single member LLC, you haven't made any special elections, you have an LLC taxed as a sole proprietorship. If it's a multiple member LLC, maybe you and a spouse and you and a sibling, you have an LLC taxed as a partnership. If you have made a special election and you want to be taxed as an S or C corp, then you are an LLC taxed as an S corp or LLC taxed as a C corporation. So it's really, really important for you to understand, and I swear I answer this question every day. So I hope that answers your question. So we talked about the taxes, which my mouse made us skip. So now let's talk about this due dates, when these tax returns are due, because this is another mistake that I see a lot of new business owners make, and it costs them so much because they don't know this. Remember, we talked about partnerships and S corporations. Partnerships and S corporations, let me wet my throat. Partnerships and S corporations are pass-through entities. That means that the entity itself does not pay taxes. The taxes pass through to the owners. Because it's a pass-through entity and the owners need that tax return to file their tax return, the due date for partnerships and S corporations is a month earlier. So if you own a partnership or an S corporation, you have a couple of days to file your taxes. Your due date is March the 15th. Now, this is the part that a lot of people don't know about, and this is where they get tripped up. If this return is filed late, the penalty for filing a partnership or S corp return late is $200 per shareholder or owner per month. So let me just give you an example. You have a business, you and your husband, you and your wife, you have a business, so 2 shareholders. You file your partnership return on March the 16th. Because it's 2 shareholders, you will pay $400, $200 for each of you for filing that return 1 day late. Let's say you file that return on April 1st. Guess what? You are going to pay $800 because now it's considered 2 months late because a partial month is a month. So because you didn't file it in March, you are now 2 months late. So now your penalty is $800. So imagine if you have a partnership with 4 members or 10 members, you get the picture. Very, very important that you file your return or an extension by March 15th so that you can avoid that penalty. Sole proprietorships, as well as individuals, and C corporations, you have until April the 15th to file your tax return. So now let's talk about bookkeeping because a lot of people don't have any type of an accounting system in place. And so this is one of the reasons that a lot of our businesses fail because we don't have the foundational pieces in place. This is also a reason why a lot of our businesses were not funded with the stimulus funding. They couldn't get PPP, couldn't get EIDL because in addition to not having a bookkeeping system in place, they haven't even filed accurate tax returns. And so let's talk about how do you handle the bookkeeping part of your business. So I maybe should have reordered this. The next time I do this presentation, I will. But I actually did best to worst. I should have probably did worst to best because QuickBooks is my favorite and Excel is my least favorite. So I'm gonna go backwards, right? So I'm gonna start with Excel. Excel is my least favorite, but it's better than the shoebox. So if you keep your information in Excel, that's better than having no system at all. The problem that I have with Excel is it is very hard to generate a financial statement based on an Excel spreadsheet. So you may have a detailed list of all of the customers, how many people paid you and all of those things, but you don't have it in the format that a lot of times lenders and investors are looking for. So again, Excel is better than nothing, but it's probably not the best option when it comes to accounting or bookkeeping. The other option is is Wave, right? So Wave is an accounting system and it's free. So if you are not financially ready to invest in a software, you can look into Wave, and Wave does have a platform that's online that you are able to keep track of your income and expenses online in a free platform. The only thing about free stuff is that there's a lot of times it's limited. So you can't get like the extensive reporting that you can get in some of the other softwares. But again, it's better than nothing. Then there's FreshBooks. FreshBooks is another cloud-based software that allows you to keep track of your income and expenses. You can email invoices and get paid online, keep track of your expenses. FreshBooks it does have a fee, but it's not as expensive as either Xero or QuickBooks. Xero is a contender, and I think they're kind of making their moves in the US. It's mostly been a lot of the people that I know that use Xero or have been using it for a long time live in other countries, but they're kind of making their way to the US, and it's not a bad system, not my favorite system, but it's not bad. And then last but not least is QuickBooks. And I like QuickBooks because it's tried and true. It's been around. Intuit is a proven company. Their system is robust. It can handle your $20,000 a year business and your $20 million a year business. I have clients that are 5 figures, 6 figure, and 7 figures that are using QuickBooks. And so those are the things that I like about it. It has the capability for you to grow into, like you can kind of start out with a basic version and kind of upgrade from there. The key is that one, you have a separate business account for your business, and two, you have some system. So pick the one that you're least likely to deviate from, and then go there. So let me see, I got something in the chat. Let me check the chat real quick. And then, I didn't mean to stop sharing. Sorry. I just wanted to check the chat. Here we go.
We're good, Bernadette. I ask everyone to hold their questions until the end. They could go ahead and load them. And also on Facebook Live, we have an audience of about 8 to 10 people that are they're compiling their questions as well.
Okay,
I did note that you have a hard stop at 1,
okay,
so we're
okay.
good.
All
Okay.
right, so really important here with the bookkeeping piece, and this isn't in the slides, but stay away from Cash App, Venmo, and all of those. They don't look professional, and I think that they project in a certain way. So if you're just getting started and this is you're doing the best you can, it all comes down to how do you want your business to be perceived. If you want to be perceived as a true business that's operating that with the potential to grow, you might want to think twice about taking cash out payments and stuff like that. So let's, one of the things that a lot of times that people ask is, how can we work how can we work together? What are some of the ways that you work with small business owners? And so one of the ways that I work with small business owners is a lot of times when there's a startup company, they're not in position financially to be able to afford to be able to pay for monthly services with an accountant. And so with these clients, I at least want to help you create an accounting system so that you don't get in trouble, you have good books when it comes time and you're ready to outsource it. It's a system that you'll be able to outsource. And so QuickBooks training is one of the ways that I help a lot of small business owners. I used to do classes and occasionally I do, but I found that I get the most success when I do one-on-one sessions with clients because I can customize the training specifically to their business and answer their questions and just tailor the software to their business. So that's one of the ways that I work with small business owners. I also do tax preparation and I'm in the midst of tax season. So as soon as this is over, I got one more meeting and I'll pull off my cape and get back into preparing taxes. So tax preparation is another way that a business owner can work with us. And again, those business owners who may have outgrown the DIY portion of keeping your books, they have outsourced their bookkeeping to us. The fourth way is I do have a mastermind group. It's closed right now, but it will be opening in June. I'll be opening the second cohort in June. And so if that's something that is of interest, we can talk about that as well. In the mastermind group, I actually coach a small group of people and I keep the group small. So it's only 10 people are accepted into the mastermind. And I coach them over 6 months on in different areas of their business. So that is that. So I do have a free gift for you because we had to kind of zoom through this presentation because I do have an appointment at 1. I wanted to give you all something that is a little more detailed of some of the stuff that we talked about and maybe a little bit that we didn't talk about. So you can go to buythebookaccounting.com, which is my company /startup, and download it's a free ebook that just kind of gives you some startup. It's no strings attached. I'm not going to spam you or anything like that. It's just really just give you this information, and hopefully it's something that will be helpful for you in your business. So we got a few minutes for some questions. And so I'm at the question and answer portion. Ms. Beth, if you want to.
Yes, I will. I first of all have to say to you, outstanding. And this is my second opportunity to participate live with you on this presentation. And I found it so enlightening. I think actually I participated last year, would I say?
December.
December of last year. And I was like, we've got to get this lady. I know she's going to be like, this is probably a small organization, but we knock on tall doors and got answers. And you were obedient and willing to help us out. And I have to take this moment, and I know You just stop, cut off when you have to, but I have to let the GCBN members know that we had on the books, but there was a little confusion there, but the devil is a liar. We're getting her back. We actually had a QuickBooks training class scheduled on the calendar, but we had some administrative challenges and we lost it, but we're getting it back, but we got to wait till after tax seasons because she is so in demand and swamped right now. And so one of our providers for GCBN, and we're going to talk about that partnership, she and I, and finish that up so that the GCBN members will have access. And even when we work through the QuickBook session, what she has even extended is even if we decide not to use her services, she has opportunities to get us QuickBooks access at a rate that she provides. So that's GCBN members. We want to help you with that. For today, I love it. I love to compare this to scriptures. Didn't our hearts burn? You know, I mean, really, it's like I'm just so renewed again. And some of the things that I've put a check on after hearing her in December. But this is what our audience is saying is on Facebook Live. And those of you here on Zoom, thank you for joining us. Rob, one of our GCBN corporate sponsors. We've got Kim and Marth. Thank you. Marth is a member of GCBN as well. Thank you, Kim is a friend of GCBN. Thank you for joining us. And we have a lot of folks over on Facebook Live. I'm trying to get them over here, but that's okay. We appreciate your support and they are chatting like crazy. Larissa, good afternoon and blessings to you. Bernadette is our extended. Jackie Marsh, hi Jackie, congratulations to you. And then Larissa says, this is excellent information. Here's some questions here. S Corporation from Pamela Bridgman, one of our corporate sponsors, S Corporation is a great entity, but it's not for everyone. Repeat it. Okay, so she's loving that. Karen, a good friend of ours, says, I'm an LLC, and she's got a question about Quicken. I'm not sure what she's asking because we put the question back to her. LLC operating in which of the four?
Right, LLC tax as.
Give me an A. Yeah. Okay. And so Pamela again comes back and says, I like QuickBooks because my accountant likes QuickBooks, LOL. But this is one question that Bernadette, that Larissa's asking. She said, and listen to me because this was a paragraph here, concerning bookkeeping purposes and any suggestions for how to keep track of things like mileage for your business. What additional documents could we have prepared prior to filing taxes for your business? And that's from Larissa.
So that's the reason that I like QuickBooks. So QuickBooks does have a mile tracker in there, so you can track your mileage inside of QuickBooks. You can track it manually by adding the mileage to the mileage log, or you can download their app on your phone and it'll actually track your miles as you're driving. So if you're using QuickBooks, I would say use the mile tracker that they have in the QuickBooks software. If you're not using QuickBooks, there are other mile tracking apps. So there's an app called Mile IQ. That's MILEIQ. You can download that on your phone, and all of these apps have a fee, but let me just tell you that at 50 cents a mile, if you're driving for business, and even with the pandemic last month, I just did my mileage. Well, I keep my mileage log up to date, and I did my mileage log for February, and my miles equaled up to about $140 in a deduction. And I don't drive that. All I do is go to the post office, which is my trip to the post office is 8.2 miles round trip. And so just going to the post office and maybe going to the UPS store to mail something or whatever, I was able to accumulate $140 in a deduction for mileage. And so people who are driving for your business, and I know that there are a lot of business owners who drive, realtors, you drive a lot, you're leaving money on the table by not taking that mileage deduction or tracking it. So whatever Mile IQ or QuickBooks is charging for the mileage app, you are going to benefit 1,000 times that fee.
Awesome. Awesome. Yeah. Pamela Bridgman Bartell again. What do you feel about taking Square payments?
Square is good. Square is a merchant account. And so taking Square payments is good. Square also does have an integration with QuickBooks that does make it easier. So that's another reason why I like QuickBooks, is because they've been around so long. Lots of platforms integrate with QuickBooks.
Okay. Oh, Marth on Zoom has made a comment here. Thank you for the freebie. I started out close to 3 years ago and presently using Square, which requests a great fee for use in Cash App or Cash. Can you please elaborate? And
Oh.
as to how do I want my business to be perceived?
So Cash App is not it's not intended for business transactions. That's the reason why it's not a fee. Cash App is a peer-to-peer transaction. And so Cash App is Beth and I go to lunch. I leave my wallet at home. Beth says, no problem, I'll take care of lunch. And I say, all right, I'll Cash App you my $20 for my lunch. That is what Cash App is intended for, unless you get the business version of Cash App, which does have a fee. So most people are using those platforms to avoid the fee, but you honestly, if nobody reads these terms and services agreements, but you are in violation of the terms and services agreement because it is intended to be a peer-to-peer transaction. The same with Zelle and all of those other platforms. They're not intended for you to do business with it. And then the other part of it is, as a consumer, if you are paying vendors with Cash App, you have no recourse if they don't deliver, or if something goes wrong, and you can't get a refund when you have Cash App. But if you use your credit card or your debit card and they don't deliver or something like that, you have some recourse of being able to get your money back.
Okay, and I'm going to interject, PayPal is an opportunity for that, and other systems are out there that are present you in, the image is important when you're doing business, and she kind of touched on that. Question still, Karen, to follow up Quicken, and I thought about that after I said it. So she's saying, where does it fall in your list of systems to use?
So QuickBooks is a steak and Quicken is a hot dog.
Whoa. Okay. Okay.
Yeah, Quicken is a great software for keeping track of personal finances. I know that there are some people who like Quicken and use Quicken. I don't visualize it as a business software. Yeah.
Okay, we heard you. Steak, hot dog. Okay. I have to have chili on my hot dog.
Yeah, it's
like... Okay, yeah. Okay, so Virginia, look here. She says, thanks, Bernadette and Beth, for awesome information. I mean, sometimes just saying thanks means a lot, doesn't it? Just taking a moment to say thank you. Okay, so here Larissa is saying, is it possible for us to have access to this PowerPoint, please? Yes,
sure.
You're a GCBN member, we're recording, and you will. You just go to our YouTube channel. So there you go. But what I really want to interject here is the opportunity when we get her after tax season to come and facilitate and listen. This is what I want to say. It's like the hot dog and the steak, okay? We're going to bring her in as we do some of our awesome presenters. And we've already worked through the cost, and we have abbreviated a great pricing for GCBN members and still a good price for a community. Let's don't squabble about that, okay? Because know it, if Beth had an opportunity to work with someone, we've worked to the fullest to get something with you in mind. So I want all of these questions that are coming and the people that are bringing them to please sign up when we get this back on the calendar. Okay, Naisha McDuffie Key, such great information. Thank you so much. Hey, King, thank you. You're welcome. King's my prayer warrior. I need to talk to you soon. Virginia, I'm interested in attending the QuickBooks training. Yes, okay. Amber, oh my gosh, hold on. Love your saying, we may be a small business, but we knock on tall doors and we get answers. Really, God gives the answers, and the people are just willing and obedient to help because they understand the need for business to grow. Business by the book, when I don't know what hers is, I understand the concept of what you say, but what I'm thinking is business by this book right here, okay? Because it all aligns with the word of God. And yes, I did put my Raggedy Bible out there, but I have others, but that's my go-to. So Nikki's saying, hello, ladies and gentlemen. Oh, hi, Nikki, how are you? PowerPoint request, great information from Sharon. And I mean, it's just going on and on. Am I getting everything here? Oh, excellent information. Thanks, Clarissa. What have we got here? What about PayPal is a question.
PayPal is fine. It's a merchant account. So the thing about it is you just want to make sure that you are using a business platform that's designed for business. Cash App and Venmo, and they're not designed for business. They're peer-to-peer transfers. So PayPal is fine, Stripe is fine, Square is fine. All of those are platforms that are designed for business transactions.
Okay. Okay. All
And
right.
let me just add this one thing about Cash App. So
Mhm.
this is a warning. When you are using Cash App in your business, and some people are going to still do it no matter what, but I just want to tell you this. You use Cash App and you don't have the business version of Cash App. Cash App can suspend your account and hold your money if you are in,
Wow.
because you're in violation of your terms and services agreement. So I know a lot of times people say, oh, I just emptied the account as soon as I get paid. Well, if they suspect that you're using your account, if they suspect that you're in violation of the terms and services agreement, they can hold that money as soon as it hits and you won't get it. And I've seen where Cash App has refunded the money to the person who sent it to you. So now you are out of your product and service
Wow.
and your
Wow.
money. So it's just it's one of those risks where you just have to kind of decide whether or not you want to take the risk or not.
Okay, we're going to quickly do 2 or 3 more here. One thing that I want to follow with you right there, that's an integrity issue,
Right.
okay? Because we're a Christian business network and we need to make sure that we are represented in excellence. And the other thing to that, when you set that standard in your business and you lower your standard to do business on that level about some fees or something like that, that tells God, if you're not faithful over, if you're faithful over a few things, you know, he can't make you the rule over many. So I had to put that in there. We've got some good stuff going on here, but I need to go to my Zoom folks here. Okay. Rob is saying, can you talk about WOTC tax credit and if it can be used if you get PPP funding?
What does that stand for?
The acronym?
Work opportunity tax credit. I've had a colleague talking to me about I should be taking advantage of that, and I wasn't sure if I can do that with PPP funding, if it's based on the same. If you know, and if you don't, that's okay.
I know that you can do it's a ERC credit, the employee retention credit. You can do that with PPP funding, but I don't know about the work opportunity tax credit.
Okay. One of the things that I want to say, Bernadette, is we're getting close to the hour. I got some homework to do at the finish up at the end, and I'm going to release you in just a second because I want to get a final comment from you. But the thing that I want to say about the presentation today is that it is available on our YouTube channel. And if Lisa or Jessica would put in the Facebook chat the opportunity for our link to our YouTube, subscribe, because we have all of our presenters, not only for Take Charge Tuesday, but Wellness Wednesday that are hosted on YouTube in our personal YouTube station. Today, Bernadette, every time I hear you, it's something about you. When we first connected, we thought we knew one another, but we really don't. But I think I call that kindred spirit. And I love the way you operate in excellence. I love your and your daughter's show. You remind me a lot just from what I've listened and heard about Jessica, my daughter and I, Dr. Jessica, please, and my daughter and I. So I commend you for your accomplishments and what you've done, but would you take just a minute to give us the nugget that we need to hear today to leave us with that? Would you please?
Okay, so my closing thought is, no matter whether you're owning your business by yourself or you have a team, you have to have a team. You have to have a team to win in your business. And I love to use this analogy when I talk about a team. When I was in school and we went to PE, every now and then they call it PE, or some people call it gym class. But when we went to PE, the PE teacher would pick two people to be team captains.
Mhm.
And those two people got to pick who was going to be on their team, depending on the sport that they were playing that day in class. And when you were the team captain, you always wanted to pick the people who were going to help you win, because most people want to win, right? And so you might not pick your friends, you might not pick your relatives, you will pick the fast kids, you pick the strong kids, you pick the kids who are going to help you win. It's the same thing in your business. You have to have a team and you have to pick people who are going to help you win in your business. So as you're growing your business, think about that. Like, if you feel like you can't afford a team, you can't afford to be in business. You have to have the right people on your team so you can win.
I want to go skip and hop. If I could, I'd turn a somersault or something. I don't know. Wow, power. I love that because it's so important. Everybody can't go where God is taking you. And listen, you've got to look to outside of your comfort zone. You look for a new business and you start initially, and I'm sure you have this experience, Bernadette. The first go-to is you expect that your family is going to support you. You think they're going to be like Ollie Lady because you started your
Or they're
business.
supposed to. They don't need what you're selling. So sell it to somebody who needs what you're selling.
Right. And so let it go. It's time to grow. And the other opportunity that you said, and I can't get past the chili dogs or whatever and steak. I put the chili on top to make it, anyway, had to be homemade though. But the deal is this. One of the things that I want to encourage, especially in Christendom, is that we stop being so, okay, I'm going there. I started to say frugal. I'm just going to say it. Can I say it? May I say it? What am I going to say? We got to stop being cheap and we got to pay. You actually do get what you pay for. Now, on the 16th, Lisa and I have a great opportunity for Lisa moved to join our platform. I love her. She's my VA. She's a business owner. She's just outstanding. I have a wonderful admin team. But she and I are going to take the platform and talk about the power of giving. Now, Lisa came up with the topic, and I'm all in there. One opportunity is with Bernadette. How important is it to your tax return charitable contributions? How important are they?
Yeah, it depends on your situation. It can make a difference.
Right, it can make a difference, right? And so some of the opportunity, which that aligns with the opportunity that if you give, it shall come back to you.
Absolutely.
And then investments. It's so important to understand that to invest in your business and to invest, when you invest in yourself, your growth and development, like the QuickBooks opportunity that we will extend to you, that you're investing in your business. And some level of that, a training and development related to your business can be written off. Is that true, Bernadette?
Absolutely.
Excellent. Okay, so this is the last one. If my daughter braids someone's hair, can she get paid by cash out without being in violation?
It's a business transaction, right?
I'm in love with you, girl. Yeah. Okay. You hear how she said and how she put it? Okay. We got to stop with her. We're right at 12:59. I know there's some other things out there. Y'all hang with me for just a minute because I want to do some homework, talk about our Wellness Wednesday platform and things like that. Bernadette, I thought I was in love with you before. Girl, it's sealed. Okay. Y'all just join me in a hand clap of appreciation for you, the time, your commitment. We have a thank you gift that's coming your way. It's not anywhere near what you've done for us today, but it's a appreciation to let you know that we are thankful to be in connection with you. Connectivity is big for us. And thank you for helping us with our year of #comeback. This is the year of the comeback for GCBN. And this is the wave that we want to take back, is that aligning ourselves in excellence. So kudos to you, great success, even more coming your way. Take care, okay?
All right, have a good one.
Blesses. You have a great one. Bye-bye. Okay, so I've released Bernadette, but what I need to say to you all today is this is a great opportunity for you to experience the awesome presentations that we actually facilitate here at GCBN. It's a wonderful opportunity for you to join us at www.gcbnetwork.com. I have to let you know something that will be announced later this week and already has been announced to our members. Our website is live. Our brand new website, great opportunity. Go out there and visit it. Go to our directory, see our members are posted there. They have greater exposure. Look at our sponsorship opportunities and look for an opportunity where you can plug in and become a member or a sponsor of Georgia Christian Business Network and our vision to put God back in business. I want to let you know also, join us tomorrow on the same time, noon, for our Wellness Wednesday platform. We have two outstanding professionals that have been diligent and taken our platform to present. This month we kick out, so you want to kick off our discussion on narcissism. And so you'll want to join in. Start at week 1 and go all the way to week 4. And so Pamela Bridgman Bartell and Rich Oswald, he's an LPC, Pamela's LSCW. Please make certain that you join in, because this is a great discussion on an outstanding topic. A lot of narcissistic behavior is happening out there, and you need to find out if you have the traits. No, I'm just kidding. But seriously, there's great opportunity for great discussion. And so our final comments, the right people on your team is powerful. Virginia, thank you for your prayers. And Pamela said, yes, it's so important. That is good, a team to win. And it's so important that you have a King Griffith on your team as well that keeps you covered in prayer. Make someone a prayer warrior. I love it. Okay, thanks Sharon for the hand claps in Virginia. You guys have been wonderful. Shout out to Lisa Muth and Jessica Copeland, Dr. Jessica, for keeping us abreast of the communication that's out there on Facebook Live. To all of you in your participation today, are you a member of our Georgia Christian Business Network Facebook group? If you're not, please join that as well. And so important, we've got so many member opportunities. Our benefits just went off the roof. I mean, just way up. We have so many great trainings coming up. Exclusive for our members is LinkedIn, social media strategies from Tyrese Eccles. Just great opportunities. Go to our Facebook group, go to our website, reach out to us. We're interested in hearing from you. Thanks again for joining us today. It's been outstanding. Go be great. Thank you. God has a plan and you are a part of it. Take care. Kim, thanks for joining us. Welcome. Come back to GCBN. We need you. Okay? Take care. Bye-bye now.